Tantor Audio, a division of Recorded Books, presents Bond Investing for Dummies, 2nd edition, by Russell Wild, MBA. Narrated by Stephen J. Cohen. Limit of liability. Disclaimer of warranty. The publisher and the author make no representations or warranties with respect to the accuracy or completeness of the contents of this work, and specifically disclaim all warranties, including, without limitation, warranties of fitness for a particular purpose. No warranty may be created or extended by sales or promotional materials. The advice and strategies contained herein may not be suitable for every situation. This work is sold with the understanding that the publisher is not engaged in rendering legal, accounting, or other professional services. If professional assistance is required, the services of a competent professional person should be sought. Neither the publisher nor the author shall be liable for damages arising herefrom. The fact that an organization or website is referred to in this work as a citation and/or a potential source of further information does not mean that the author or the publisher endorses the information the organization or website may provide or recommendations it may make. Further, readers should be aware that Internet websites listed in this work may have changed or disappeared between when this work was written and when it is read. Introduction. Perhaps you bought this book online, either in text or digital format. But if you are still the kind of reader who prefers to browse through aisles and handle books before you buy them, you may be standing in the personal finance section of your favorite bookstore right now. If so, take a look to your left. Do you see that pudgy, balding guy in the baggy jeans, perusing the book on getting rich by day trading stock options? Now, look to your right. Do you see that trendy young woman with the purple lipstick and hoop earrings thumbing through that paperback on how to make millions in foreclosed property deals? I want you to walk over to them. Good. Now, I want you to take this book firmly in your hand. Excellent. Finally, I want you to smack each of them over the head with it. Nice job. Wiley, the publisher of this book, has lawyers who will want me to assure you that I'm only kidding about smacking anyone. So, in deference to the attorneys and because I want to get my royalty checks, I'm kidding. I'm only kidding. Don't hit anyone. But the fact is that someone should knock some sense into these people. If not, they may wind up, as do most people who try to get rich quick, with nothing but big holes in their pockets. Those who make the most money in the world of investments possess an extremely rare commodity in today's world, something called patience. At the same time that they're looking for handsome returns, they are also looking to protect what they have. Why? Because a loss of 75% in an investment, think tech stocks, 2000 through 2002, require you to earn 400% to get back to where you started. Good luck getting there. In fact, garnering handsome returns and protecting against loss go hand in hand, as any financial professional should tell you. But only the first half of the equation, the handsome returns part, gets the lion's share of the ink. Heck, there must be 1,255 books on getting rich quick for every one book on limiting risk and growing wealth slowly but surely. Welcome to that one book, Bond Investing for Dummies, 2nd edition. So, just what are bonds? A bond is basically an IOU. You lend your money to Uncle Sam, to General Electric, to Procter & Gamble, to the city in which you live, to whatever entity issues the bonds, and that entity promises to pay you a certain rate of interest in exchange for borrowing your money. This is very different from stock investing, where you purchase shares in a company, become an alleged partial owner of that company, and then start to pray that the company turns a profit, and the CEO doesn't pocket it all. Stocks, which really aren't as bad as I just made them sound, and bonds, complement each other like peanut butter and jelly. Bonds are the peanut butter that can keep your jelly from dripping to the floor. They are the life rafts that can keep your portfolio afloat when the investment seas get choppy. Yes, bonds are also very handy as a source of steady income, but contrary to popular myth, that should not be their major role in most portfolios. Bonds are the sweethearts that may have saved your grandparents from selling apples on the street during the hungry 1930s. Note that I'm not talking about high-yield junk bonds here. They are the babies that may have saved your 401k from devastation during the 3 growingly bear market years on Wall Street that started this century. In 2008, high-quality bonds were just about the only investment you could have made that wound up in the black at a time when world markets frighteningly resembled the Red Sea. And in 2011, when stocks went just about nowhere during the course of the year, bondholders of nearly all kinds were richly rewarded. Bonds belong in nearly every portfolio. Whether or not they belong in your portfolio is a question that this book will help you to answer. About this book. Allow this book to serve as your guide to understanding bonds, choosing the right bonds or bond funds, getting the best bargains on your purchases, and achieving the best prices when you sell. You'll also find out how to work bonds into a powerful, well-diversified portfolio that serves your financial goals much better, I promise, than day trading stock options or attempting to make a profit flipping real estate in your spare time. I present to you, in easy-to-understand English, unless you happen to be listening to the Ukrainian or Korean translation, the sometimes complex, even mystical and magical world of bonds. I explain such concepts as bond maturity, duration, coupon rate, callability, yikes, and yield. And I show you the difference among the many kinds of bonds, such as treasuries, agency bonds, corporates, munis, zeros, convertibles, strips, and tips. Because this book is the all-new and thoroughly updated second edition, I'll also be filling you in on some very important goings-on in the bond world over the past half-decade. Notably, I cover the stock market collapse of 2008 and the rush to safety that made bonds, especially U.S. Treasury bonds, the belle of the ball. I also discuss the total collapse of the municipal bond market. You know, the total collapse that Steve Croft announced ahead of time on 60 Minutes in December 2010. That would be the total collapse that never happened, or perhaps, gulp, hasn't happened yet. And who can forget the much ballyhooed Standard & Poor's downgrading of the U.S. government in mid-2011, and the rather bizarre advance in Treasury bond prices in the months that followed. Since I wrote the first edition of this book, the number and types of bond funds in which investors can now sink their money has virtually exploded, for better or worse. Many of these new funds, mostly exchange-traded funds, are offering investors slices of the bond market, often packaged in a way that makes bond investing trickier than ever. And perhaps the biggest change in the 6 years since the first edition of this book was published is this. Interest payments, the main reason that bonds exist, have plummeted to historic lows. Never in our lifetimes or our parents' lifetimes have we seen the negative real returns after inflation returns that some bonds have been offering. In this book, you discover the mistakes that many bond investors make, the traps that some wily bond brokers lay for the uninitiated, and the heartbreak that can befall those who buy certain bonds without first doing their homework. Don't worry, I'll walk you through how to do your homework. You find out how to mix and match your bonds with other kinds of assets, such as stocks and real estate, taking advantage of the latest in investment research to help you maximize your returns and minimize your risk. Here are some of the things that you need to know before buying any bond or bond fund. Things you'll know cold after you finish Bond Investing for Dummies, 2nd edition. What's your split gonna be? Put all of your eggs in one basket and you're going to wind up getting scrambled. A key to successful investing is diversification. Yes, you've heard that before, so is everyone. But you'd be amazed how many people ignore this advice. Unless you're working with really exotic investments, the majority of most portfolios is invested in stocks and bonds. The split between those stocks and bonds, whether you choose an 80-20 aggressive portfolio, composed of 80% stocks and 20% bonds, a 50-50 balanced portfolio, or a 20-80 conservative portfolio, is very possibly the single most important investment decision you'll ever make. Stocks and bonds are very different kinds of animals, and their respective percentages in a portfolio can have a profound impact on your financial future. Chapter 12 deals with this issue directly, but the importance of properly mixing and matching investments pops up in other chapters as well. Exactly what kind of bonds do you want? Depending on your tax bracket, your age, your income, your financial needs and goals, your need for ready cash, and a bunch of other factors, you may want to invest in treasury, corporate, agency, or municipal bonds. Within each of these categories, you have other choices to make. Do you want long-term or short-term bonds? High-quality bonds or higher-yielding bonds? Freshly issued bonds or bonds floating around on the secondary market? Bonds issued in the United States or bonds from Mexico or Brazil? I introduce many different types of bonds in Part 2, and I discuss which may be most appropriate for you and which are likely to weigh your portfolio down. Where do you shop for bonds? Although bonds have been around, more or less in their present form, for hundreds of years, see a brief history of bonds in Chapter 3. The way they are bought and sold has changed radically in recent years. Bond traders once had you at their tender mercy. You had no idea what kind of money they were clipping from you every time you traded a bond, allegedly, on your behalf. That is no longer so. Whether you decide to buy individual bonds or bond funds, Chapter 14 helps you make that thorny decision. You can now determine almost to the dime how much the hungry middlemen intend to nibble, or have nibbled from your trades in the past. Part 4 is your complete shopper's guide. What kind of returns can you expect from bonds, and what is your risk of loss? Here is the part of bond investing that most people find most confusing. And oh, how misconceptions abound. You can't lose money in AAA-rated bonds? How can I break this news to you? Gently. In Chapter 4, I explain the tricky concepts of duration and yield. I tell you why the value of your bonds is so directly tied to prevailing interest rates, with other economic variables giving their own push and pull. I give you the tools to determine just what you can reasonably expect to earn from a bond and under what circumstances you may lose money. If you've ever read one of these black and yellow dummies books before, you know what to expect. This is not a book you need to listen to from start to finish. Feel free to jump back and forth in order to glean whatever information you think will help you the most. No proctor with bifocals will pop out of the air, Harry Potter style, to test you at the end. You needn't commit it all to memory now or ever. Keep this reference book for years to come as your little acorn of a bond portfolio grows into a mighty oak. Conventions used in this book. To help you navigate the text of this tome as easily as possible, I use the following conventions. Whenever I introduce a new term, such as, say, callability or discount rate, you can rest assured that a definition or explanation is right around the corner. If you want to share some interesting tidbit of information that isn't essential to your successful investing in bonds, I place it in a sidebar with its own heading, set apart from the rest of the text. See how this whole thing works? All web addresses are clearly formatted, so they're easy to pick out if you need to go back and find them. Keep in mind, when using one of these web addresses, just type in exactly what you hear in this book. What you're not to read. Unless you're going to become a professional bond trader, you don't need to know everything in this book. Every few sections, you'll undoubtedly come across some technical stuff that is not essential to becoming a successful bond investor. Listen through the technical stuff if you wish, or if ratios and percentages and such make you dizzy, feel free to skip over it. Most of the heavy technical matter is tucked neatly into the sidebars, but if any technicalities make it into the main text, I give you a heads up with a technical stuff icon. That's where you can skip over or speed read or choose to get dizzy. Your call. Foolish assumptions. If you feel you truly need to start from scratch in the world of investments, perhaps the best place would be the latest edition of Investing for Dummies by Eric Tyson, published by Wiley. But the book you're listening to is only a smidgen above that one in terms of assumptions about your investment savvy. I assume that you are intelligent, that you have a few bucks to invest, and that you have a basic education in math and maybe a very rudimentary knowledge of economics. That's it. In other words, even if your investing experience to date consists of opening a savings account, balancing a checkbook, and reading a few Susie Orman columns, you should still be able to follow along. Oh, and for those of you who are already buying and selling bonds, and feel completely comfortable in the world of fixed income, I'm assuming that you, too, can learn something from this book. Oh, you know it all, do you? Can you tell me what a sukuk is, or where to buy one? Huh. See Chapter 9. How this book is organized. Here's a thumbnail sketch of what you'll be hearing in the coming book. Part 1. Bond Appetit. In this first part, you'll find out what makes a bond. You'll discover the rationale for their very existence. I'll take you through a portal of time to see what bonds looked like decades, even centuries earlier. You'll get to see how bonds evolved and what makes them so very different from other investment vehicles. I'll give you a primer on how bonds are bought and sold, and I introduce you to the sometimes very helpful, but sometimes very misleading, world of bond ratings. Part 2. Numerous and varied ways to make money in bonds. Anyone, well, practically anyone, who wants to raise money can issue a bond. The vast majority of bonds, however, are issued by the U.S. Treasury, corporations, government agencies, or municipalities. This section examines the advantages and potential drawbacks of each, and looks at the many varieties of bonds that these entities may offer. I also introduce you to some rather unusual breeds of bonds, not the kind your grandfather knew. Part 3. customizing and optimizing your bond portfolio. All investments, including bonds, carry their own promises of returns and measures of risk. Some bonds are as safe, well, almost as safe, as bank CDs. Others can be as wildly volatile as tech stocks. In this part of the book, I help you to assess just how much investment risk you should be taking at this point in your life, and how, by using a mix of different bonds, you can minimize that risk for optimal return. Part 4. Bonds Away: Navigating the Fixed Income Marketplace. Here, I address the role of bond brokers, discuss the pros and cons of owning individual bonds as opposed to bond funds, explain how to buy and sell bonds without getting clipped, and offer ways to protect yourself so that you don't get stuck with any fixed income dogs. The kennel has lately become overpopulated. I reveal ways for you to blow away the black smoke that has long shrouded the world of bond trading. Part 5. Bonds as replacements for the old paycheck. Many people think of bonds as the ultimate retirement tool. In fact, they are, and they aren't. In this section, I discuss bonds as replacements for your paycheck. As you'll discover, many retirees rely too heavily on bonds, or on the wrong kinds of bonds. Listening to this section, you may discover that your nest egg needs either a minor tune-up or a major overhaul, and that your bond portfolio needs beefing up or paring down. Part 6. The Part of Tens. This final section, a standard feature in all Dummies books, will wrap up the book with some practical tips and a few fun items. The web offers much in the way of additional education on bonds, as well as some excellent venues for trading bonds. Icons used in this book. Throughout the book, you'll find icons, and they signal certain, we hope, exciting things going on in the accompanying text. Tip: although this is a how-to book, you'll also find plenty of whys and wherefores. Any paragraph accompanied by this icon, however, is guaranteed to be at least 99.99% how-to. Remember: read twice. This icon indicates that something important is being said and is really worth committing to memory. Warning: the world of bond investing, although generally not as risky as the world of stock investing, still offers pitfalls galore. Whenever you hear this, you'll know that danger of losing money lies ahead. Technical stuff. If you don't really care about how to calculate the after-tax preset value of a bond selling at 98 yielding 4.76%, maturing in 9 months, and subject to AMT, but instead you're just looking to gain a broad understanding of bond investing, feel free to skip or skim the denser paragraphs that are marked with this icon. Greed alert. The world of Wall Street is full of people who make money at other people's expense. Whenever you hear this, you'll know that I'm about to point out an instance where someone, most likely calling himself a bond broker or perhaps a bond mutual fund manager, is likely to be sticking a hand deep in your pocket. Where to go from here? Where would you like to go from here? If you would wish to start at the beginning, if you're mostly interested in municipal bonds, hey, no one says that you can't jump right to Chapter 8. Global bonds? Go ahead and jump to Chapter 9. It's entirely your call. Part 1. Bon appetit. In this part, in the first 3 chapters of this section, you find out what makes a bond a bond. You discover the rationale for their being and what makes them different from other investment types. you can begin to assess whether bonds belong in your portfolio. Chances are they do. I take you on a trip back in time to see how bonds looked in yesteryear and show you how and why they evolved into the most popular investment vehicle on Earth today. You also find out how the bond markets work, and about some relatively recent developments that have turned those markets more or less on their pointed heads. In Chapter 4, you get a preliminary education on the complicated pricing of bonds and the myriad and often confusing ways that bond returns are measured. You pick up some very important bond concepts and much of the bond jargon that could help you to operate more effectively as an investor in the bond market. Chapter 1. So you want to be a bondholder. In this chapter, getting a handle on the nature of bonds, knowing why some bonds pay more than others, understanding the rationale behind bond investing, meeting the major bond issuers, considering individual bonds versus bond funds. Long before I ever knew what a bond is, it's essentially an IOU, I agreed to lend $5 to Tommy Potts, a blonde, goofy-looking kid in my 7th grade class. This was the first time that I'd ever lent money to anyone. I can't recall why Tommy needed the $5, but he did promise to repay me, and he was my pal. Weeks went by, then months, and I couldn't get my money back from Tommy no matter how much I bellyached. Finally, I decided to go to a higher authority. So I approached Tommy's dad. I figured that Mr. Potts would give Tommy a stern lecture on the importance of maintaining his credit and good name. Then Mr. Potts would either make Tommy cough up the money, or he would make restitution himself. Mr. Potts, I said, I lent Tommy $5 and— You lent him money? Mr. Potts interrupted, pointing his finger at his deadbeat 12-year-old son, who, if I recall correctly, at that point had turned over one of his pet turtles and was spinning it like a top. Yes, Mr. Potts, $5. At which point Mr. Potts neither lectured nor reached for his wallet. Rather, he erupted into mocking laughter. You lent him money, he bellowed repeatedly, laughing, slapping his thighs, and pointing to his turtle-torturing son. You lent him money. And that, dear listener, was my very first experience as a creditor. I never saw a nickel from Tommy, in either interest or returned principal. Oh yes, I've learned a lot since then. Understanding what makes a bond a bond. Now suppose that Tommy Potts, instead of being a goofy kid in the 7th grade, were the U.S. government, or the city of Philadelphia, or Procter & Gamble. Tommy, in his powerful new incarnation, needs to raise not $5, but $50 million. So Tommy decides to issue a bond. A bond is really not much more than an IOU with a serial number. People in suits, to sound impressive, sometimes call bonds debt securities or fixed-income securities. A bond is always issued with a specific face amount, also called the principal or par value. Most often, simply because it is convention, bonds are issued with face amounts of $1,000. So in order to raise $50 million, Tommy would have to issue 50,000 bonds, each selling at $1,000. Of course, he would then have to go out and find investors to buy his bonds. Every bond pays a certain rate of interest, and typically, but not always, that rate is fixed over the life of the bond, hence fixed income securities. The life of the bond is the period of time until maturity. Maturity, in the lingo of financial people, is the period of time until the principal is due to be paid back. Yes, the bond world is full of jargon. The rate of interest is a percentage of the face amount and is typically, again, simply because of convention, paid out twice a year. So if a corporation or government...
Sample complete. Ready to continue?